The high energy prices we're seeing now reinforce a few things. They reinforce the need for a transition to new forms of energy.
We should get rid of the debt ceiling. We don't need to have this kind of brinkmanship every couple of years.
If it doesn't, we're going to be defaulting on a debt that would lead to self-inflicted wounds that risk the market tanking.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Progress on the debt ceiling. Democrats indicate they'll accept a Republican compromise to allow a short-term increase on borrowing, postponing the risk of default. Antony Blinken slams China over its recent military maneuvers around Taiwan. We'll hear more from our conversation with the U.S. Secretary of State later this hour. And an exclusive conversation with Mervyn King. This hour, we speak to the former Bank of England governor. If you have any questions for him, you can IB plus TV Go, or you can tweet me at Flacco. Now, first thing is first, so let's check in on the markets. There does seem to be a little bit more easing of some of the anxiousness that we saw in terms of the wall of worries. Now, we still look, of course, at the energy price and see what happens with that. But it seems that we could have some kind of resolution on the debt ceiling. Now, it's not a real resolution, but at least it's a postponement until December of some of the things that could go wrong. So that's bringing a bit of relief. And also, we could see a rapprochement between the U.S. and China, which is also, once again, favorable for traders. So you can see the Europe 600 gaining 1%, S&P futures also on the high, and then the DAX gaining some 1.1%. Also, in Germany, we look at coalition building. Let's get to the map to see the differences between some of the stock prices. Here yesterday, we had a very important speech also from Boris Johnson of the UK. Again, a couple of commodities that are actually quite supportive of the FTSE, where it's gained some 0.9%. But overall, the mood has certainly changed to what we had yesterday. Now, European equities gained this morning, bond yields also stabilizing. On day two of the Bloomberg Invest Global Conference, investors warned of the looming clouds of inflation and continued volatility.
Surprised to see this most recent retreat and correction that we've been going through.
Certainly, China has already gone through a bit of a correction.
Their plan is to be a superpower, and they're moving consistently in that direction. So we do think it's investable.
Diversification is key in an environment like this.
Being at least somewhat better diversified geographically.
You have to pivot, you have to change, you have to be agile.
Active management, I think, is going to be more important in the next decade in the past.
We've seen a dramatic growth in allocations to privates.
Anybody who's on the sidelines underallocated to alts pre-pandemic and saw the performance. With this reopening, we're just seeing a real resurgence in demand.
It has never been more punitive to hold cash.
If the inflation piece falls over, the whole thing falls over.
The problem is stagflation. That's the real risk.
There's no answers to it yet, but we should expect to see continued volatility.
Well, joining us now is Mervyn King, Lord King. He was a Bank of England governor between 2003 and 2013. Since then, he's been a professor at the New York University Stern School of Business. Since 2018, he's also been a contributor with Bloomberg Opinion. So fabulous. Thank you so much for joining us, Lord King. I have a million questions to actually ask about the economy, about some of the pitfalls, supply chains, inflation.
Well, good morning, Francine.
Good morning to you. What do you see as the biggest concern for central banks right now? Is inflation really transitory, or is there a risk that, because we believe it's not transitory, it actually becomes sticky?
I think central banks are really worried about inflation now. Much of what we see probably is transitory, but nevertheless, it's a lot easier to see upside risks to inflation than downside risks. None of us know where inflation will go over the next year or so, but upside risks are coming, I think, from three sources. One, as we gradually learn to live with COVID-19, the bottleneck effects are pushing up some prices. Secondly, energy prices, we've seen, even yesterday, they moved all over the place, the gas prices. We don't know where they'll go, but it's much easier to see upside risks than downside risks. And third, and I think one which is very different from the past 20, 30 years, is that the political risks are also much stronger. There's real pressure now to boost public spending, but not to raise taxes to finance it. And as interest rates start to rise, market rates are going up, policy rates will follow. Politicians will be nervous about the impact of that on their financing costs. All of that will make it much more difficult for central banks not to fall behind the curve.
So what should they do, Lord King? I mean, it's great to speak to you also with, the history that you've had at the Bank of England. In 2011, inflation was at 5%. you left interest rates at 0.5%. I mean, how do you view, if you were in charge now, what would you do?
I think the most important thing is to keep options open. I think they should abandon forward guidance. I think that's been a big mistake in the last few years. The Federal Reserve has been saying for some while that it will keep rates low for a long while. Perhaps not even raise rates until 2023, 24. All central banks have suddenly changed their language, and that's to be welcomed. But you can see why they're reluctant to do it, because it means abandoning what they were saying before. And the important thing now is not to pretend that we know what will happen in the future, but to demonstrate that central banks are willing to respond very quickly if those upside risks materialize.
So, Lord King, how quickly should the Bank of England move, given where we are
Well, I'm not
with
going to
inflation?
give advice to the bank as to what it should do. The main thing is that I think it is now clearly alert and very much on the ball of thinking about what's going to happen to inflation. And we've seen that inflation can move really pretty quickly outside the control of the central bank. So all these attempts to revise frameworks for monetary policy, average inflation targeting, just out of the window, basically, because the idea that you can gradually control inflation to let it go above target a little bit for a short period and then bring it back doesn't square with what happens in the real world. So I think being alert to the data, some of the upward pressures will be transitory, but the real risk is that it gets embedded into upward pressure on wages. That's going to be the thing that central banks will focus on.
I mean, we're also really trying to understand what's happening with house prices here in the UK. I mean, they've been a little bit all over the place with some, upward pressure. How do you see it?
Well, who knows where house prices will go, but they are reflecting a mixture of things. The most important challenge, I think, for policymakers, both central banks and governments, over the next few years, is the need to recognise that there'll be significant reallocation of resources within the economy. We're dealing with a period now of greater structural change, and that makes it less easy to think about just the growth rate of GDP or what is happening in aggregate. It's the changes in the structure of the economy that will matter, and you can see that most clearly in the United Kingdom with the strategy of levelling up, trying to shift resources from the pressured southeast to the Midlands and the north. How this will be brought about is unclear, but it's clearly a major objective of policy, and that will imply structural changes in the economy.
So what is the biggest concern right now in terms of readjusting this economy? What will the UK economy look like in 5 years? How difficult is it to answer?
The market will tell us what the economy will look like in 5 years' time. It'd be a big mistake for the government to try to predict. For example, how do we know how large the airline industry will be 5 years from now? Will it get back to where it was, or where it would have been expected to be before COVID-19, or will it be significantly smaller? We don't know, and we shouldn't pretend to know. The market will tell us over a period of time. The important thing is to make sure that resources can easily move from one sector to another. And I think that will create quite big challenges in a number of zombie companies that have been supported by low interest rates, suddenly finding that they're going to have to own up to the fact that they can't repay all their debt. That is a good thing in the sense that it will enable resources to shift to sectors that are more profitable, but it will give us a big challenge in restructuring those debts in the meantime.
Lord King, do you have an idea of how many zombie companies we could be looking at?
No, but I think it's a global...
How do you manage?
I think it's a global phenomenon, and I think the big challenge is that we haven't really had to deal with large numbers of companies, or for that matter, large numbers of sovereign indebted countries, all needing to restructure their debt at the same time. We don't really have an infrastructure to cope with that, and I think this is going to be a significant concern in the next few years.
Significant, could be systemic if it all comes at once, that we should be spending a lot more time on?
I think it could be systemic in those parts of the world where the banking system is less robust and less resilient. I think that means the continent of Europe in part, but also some parts of Asia. We've seen in recent weeks concerns about Chinese indebtedness and the size of their real estate sector expand to the point where people around the world are worried about the consequences of that.
Do you worry? I mean, you're talking about Evergrande and Fantasia.
Evergrande and others that may follow in the wake. I think we should be concerned.
You lived through Lehman. Could this be a Lehman moment?
I don't think it's a Lehman moment in the sense that a major financial institution at the heart of the world economy, in the G7, and at the heart of the payment system domestically is threatened? No. But I do think it could lead to significant strains and stresses in the financial system around the world, which will lead to rises in interest rates, and that will pose problems for governments and businesses and households alike.
Lord King, thank you so much. Lord Mervyn King, their former Bank of England governor, stays with us, and we'll talk a lot more about some of these zombie companies and also other parts of the world. In the meantime, we're talking a little bit about inflationary pressures, of course, coming from energy, but also the UN World Food Price Index climbing at the highest in a decade. Now, this has huge implications, especially for the emerging markets, is a societal concern that we have to address, and we'll talk a lot more about that. Coming up, Boris Johnson paints a future of Britain of high wages and high productivity, but can he keep his ambition with inflation? We'll focus in on that next with Mervyn King. This is Bloomberg.
Russia has, in the past, used energy as a tool, or some would say a weapon, of its foreign policy. I hope that's not what we're going to see going forward, especially as we get to the winter.
Secretary of State Antony Blinken there telling me that he hoped Russia would not use the situation as a foreign policy tool. His comments came as Vladimir Putin offered relief to Europe's gas crisis. Now, after a pretty chaotic day that saw benchmark gas prices rise 40% yesterday, the Russian president said that he could stabilize the problem by exporting record volumes of fuel to Europe. Here in the UK, the price rises are being felt by investors. One gauge of national inflation expectations topped a 13-year high yesterday. The 10-year break-even rate also hitting 4%, twice the Bank of England's target, adding additional pressure for the UK central bank to take monetary policy action. Well, let's get back to the former Bank of England governor, Mervyn King. He's still with us. He's also the co-author of Radical Uncertainty, Decision-Making Beyond the Numbers, a book about the pitfalls of mathematical models in economics, which, Lord King, is probably one of the most important actually points on how we measure things. And if you don't have the right data, or if you don't look at things the right way, then it's difficult to have the right policy reaction. When you look at energy prices, Lord King, and when you look at actually what's been happening over the last couple of weeks, is this chronic underinvestment in our old economy, and are we going to see many more shocks like this?
I think it reflects a rather incoherent energy policy, both in the UK and right across Europe. And I think Europe has become very dependent on Russia for natural gas. And I think in the rush to pretend that we can rely very quickly on renewables, we've left ourselves exposed, as we've seen this year. So that's a definite problem, and it's a supply-side problem which only governments can really get to grips with, and I hope they do. But for the moment, what we're going to be seeing, I think, is not just rising prices, but very volatile prices, and that makes it extremely difficult to plan, whether it's households deciding what heating system to use or what businesses will do. That's, I think, the big problem, the sheer uncertainty introduced by the lack of a coherent policy framework.
So how much of a shock could it actually be to GDP, but actually to companies? We're looking at it through the lens of inflation expectations. Yes. Should we look at it more as an impact on the real economy?
Well, we don't know what will happen, but the risk, I think, is that incomes will be squeezed through higher prices, partly through higher energy prices, but also other higher prices coming from some of the problems as we come through COVID-19. And those higher prices, even though they may be transitory increases, will nevertheless lead to higher wage pressures. And employers trying to re-establish themselves after COVID-19 will give in to those wage pressures, wages will rise, and that will lead to a further stage in the inflationary process. And of course, this is what we've seen in the past. And each time the temptation was to say, oh, it's transitory, it's a one-off thing, we can get on top of this. But one stage leads to another, and you end up with an inflationary spiral. That has to be the risk. Now, it's only a risk, and much will depend on central bank action. But the central bank action may need to lead to rather unpleasant consequences for demand and output if they're to keep on top of the inflationary problem.
How unpleasant? So what are we...
Well, I think the longer that central banks delay their action, the more they would have to do to take control of the rise in inflation. And that runs the risk that if they have to do more down the road than they would do if they acted earlier, then you run the risk of slowing the economy, and at the extreme case, turning the economy into a downturn again. Those are the risks. And of course, we're moving into this very uncomfortable period in which if energy and food prices rise sharply, and if there is a need to pay higher wages to attract certain kinds of workers, then that is going to lead to higher prices, and it cannot lead to a second round of further wage increases to offset it unless you're going to end up in an inflationary spiral. So keeping the lid on wage increases in general while allowing wages in certain sectors to rise is going to be very important.
Lord King, we also spoke to the Bank of Greece governor, and he was talking about, the inflation situation being under control, whilst at the same time markets mispricing possible interest rates.
I will not rush to say that we have stagflation now. The situation is still under control. It is true that we are in the midst of a perfect storm. Bottlenecks due to the pandemic, higher energy prices, gas prices are up 500% since the beginning of the year. Electricity prices are up 250% since the beginning of the year. But despite that, our forecast, the ECB forecast, the OECD forecast, the IMF forecast, is that inflation will exceed 2% this year, but next year and the year after, that is in the medium term, it will fall below 2%.
That was the Greek Central Bank Governor Yannis Stornaros there speaking to Bloomberg. Lord King, is this a mathematical problem on how we measure inflation, or is it just because we're in extraordinary times?
It's because we're in very difficult times. I thought the Greek governor summarized the problem very accurately, but to rely on forecasts as a salvation is not a wise thing to do. I remember at the Bank of England when we would see forecasts for inflation, they'd always come back to the target. Why? Because that's what we'd said would happen. It was a circular process. Central banks have to be willing to take the action and to be seen to be willing to take action if it's going to be credible that inflation will fall back to the target. And that's a difficult thing to achieve when you may face a very unpleasant trade-off between slowing the rise in inflation and trying, on the other hand, to encourage a recovery in activity.
But especially if you're not listening to your own economists and own forecasts.
Well, I think the difficulty with forecasts is that there's enormous uncertainty about it, particularly in present circumstances. COVID-19 was not a normal business cycle, and much of the language that's been used about rates of decline of output and then rates of recovery, I think has fallen into the trap of not realizing that demand and supply fell together, then rose together, fell again, and now are recovering together. None of that led to a very large output gap opening up. And I think it's a mistake for people what you need to do is to look at what's happening on the ground, ask what's going on here. That was what Alan Greenspan was so successful at doing for a long while. And I think we need to get back to that, not just relying on forecasts, which in the medium term always come back to where you want them to come back to.
Lord Mervyn King, thank you so much, as always, for making a bit of time to come and speak to us on Bloomberg, the former Bank of England governor, there with some pretty sharp analysis of where inflation will go. Coming up, we hear more from the U.S. Secretary of State, Antony Blinken. He says China should cease its actions towards Taiwan. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. Russian President Vladimir Putin has intervened in the energy market, offering to stabilize Europe's gas crisis and saying Russia could potentially export record volumes of the fuel this year. His deputy leader quickly said that he would certify this controversial Nord Stream 2 pipeline and would be one way to boost gas exports. European natural gas futures plunged on Putin's remarks after earlier hitting record highs. Bloomberg has learned the ECB is studying a a new bond buying program to prevent any market turmoil when emergency purchases are phased out next year. According to sources, the plan would replace the existing crisis scheme and complement an older open-ended QE program that's currently buying 20 billion euros a month in debt. President Biden plans to meet virtually with China's Xi Jinping before the end of the year. Plans for the meeting were announced after talks in Zurich between the White House National Security Advisor and the senior Chinese foreign policy advisor. A U.S. official called the latest discussions more meaningful and substantive than previous meetings. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thank you so much. Now, coming up, moving towards an accord, will stocks and futures gain as progress is made on lifting the U.S. debt cap? Jamie Dimon says the limit should be removed altogether. We discuss that next, and this is Bloomberg. Progress on the debt ceiling. Democrats indicate they'll accept a Republican compromise to allow a short-term increase on borrowing, postponing the risk of default. Antony Blinken slams China over its recent military maneuvers around Taiwan. We'll hear from our conversation with the U.S. Secretary of State later this hour. And an exclusive conversation with Mervyn, the former Bank of England governor, tells his program that it's important for central banks to keep their options open, but that any action they take may be painful. Well, good morning, everyone. Happy Thursday. I'm Francine Lacqua in London, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 7th of October. Now, U.S. Democrats have indicated that they'll accept Mitch McConnell's offer to allow a short-term increase to the government borrowing limit into December. A Senate vote is possible today, but the deal merely postpones the default risk until the year end.
We're making good progress. We're not there yet, but I hope we can come to an agreement tomorrow morning.
All right, let's get to the latest with our very own Danny Berger, also my co-anchor for the next hour. Danny, first of all, I mean, we could see a vote as soon as today. How much of a victory is this for the Democrats?
Well, the Democrats have certainly claimed this as a victory. Of course, as you mentioned, this is essentially just kicking the can down the road, and it doesn't even really clear Christmas. So it doesn't solve this fundamental issue. So it puts Democrats in kind of a difficult position that they're going to have to retake this up, and essentially they either need Republicans to capitulate or they're going to have to really put an exact number to the debt ceiling. And that could potentially be embarrassing for them, to put it in simple terms, because Republicans can use that in their GOP campaigns against them when midterms rolls around. So, yes, it's a delay for now, but it's just an off-ramp to more troubles potentially in 2 months from now.
I mean, the markets are really taking in their stride.
Yeah.
Is it just because it pushes the can down the road so they don't want to worry about it now?
I think in some ways it kind of just added to this more positive mood music at the end of the day yesterday. We had, of course, the energy news from Russia, which helped markets. But you and I have talked to plenty of people who say, OK, markets always expect this will work out. It's not priced in. Well, it seems that to some extent it must have been priced in if we have this very positive reaction. I will say, if you look at short-dated paper, which is what we're looking at now, yields on that did spike. It has come back down. But it might just be investors don't know where to price this now. They don't know what the X date is, the so-called X date that will be the risk event. So they've just kind of not really sure what to do with it, and that might be why we're seeing markets react the way they are.
Danny, thanks so much. Or Danny Berger there. Danny will be, of course, joining me from 10 a.m. for the second hour of Bloomberg Surveillance Early Edition. Now, President Joe Biden is planning to hold a virtual meeting with China's Xi Jinping before the end of the year. Among the possible items on the agenda, trade, rising tensions over Taiwan. The Secretary of State, Antony Blinken, has criticized Beijing's actions toward Taiwan, saying they're provocative and destabilizing. Well, he spoke to me yesterday in Paris, and I started by asking him about the phone call between Presidents Biden and Xi.
They spoke on the phone just a few weeks ago and had a productive conversation covering a lot of issues. And they, whether they'll have occasion to get together in the weeks or months ahead, we'll see. They're likely to both participate in some fashion in the G20 meeting, for example. But they had a good, productive conversation, and will continue the work that they set out.
We've seen incursions of Chinese plane in Taiwan.
Is there a red line that you think President Xi will not cross? Does he understand a red line, or are tensions high?
Look, the actions we've seen by China are provocative and potentially destabilizing. So what I hope is that these actions will cease because there is always the possibility of miscalculation, of miscommunication, and that's dangerous. So in the past, we've managed to handle the issues surrounding Taiwan in a way that's actually sustained stability. Provocative actions go in exactly the wrong direction, and it's very important that no one take any unilateral actions that change the status quo by force. And so we really need to see China cease some of the actions that it's taken, because they are potentially a source of instability, not stability.
And so the U.S. needs to take a hard line, but at the same time trying to find a common agreement when it comes to climate change.
Well, there are many issues in the relationship between the United States and China. It is one of the most consequential relationships in the world. It's one of the most complicated relationships in the world, and it has different aspects to it. There is certainly a competitive aspect that we know very well. There are adversarial aspects. There are also cooperative aspects. And we have to be able to deal and engage in every single one of these aspects of the relationship. At the same time, climate happens to be an existential issue that affects everyone on the planet, whether it's the United States, whether it's China, whether it's any other country. And China, like the United States, has great responsibility when it comes to dealing effectively with climate change. We're about 15% of global emissions. China is 37% of global emissions. And so it's important for both of us to step up and meet our responsibilities. And that means having ambitious targets for how we're going to actually curb climate change. It also means making sure that we're contributing to help others deal with resilience, to deal with adaptation. And it means taking important steps like, for example, moving away from coal.
Secretary, there's a lot of focus, of course, on how the Chinese authorities are dealing with Evergrande. What does it tell you about Chinese stewardship?
Well, look, China has to make sovereign economic decisions for itself. But we also know that what China does economically is going to have profound ramifications, profound effects on literally the entire world, because all of our economies are so intertwined. So certainly when it comes to something that could have a major impact on the Chinese economy, we look to China to act responsibly and to deal effectively with any challenges.
Secretary of State there, Antony Blinken, speaking to me earlier in Paris. Now, coming up, Europe's startup scene will be joined by the founder of Moonfire Ventures to discuss why European tech is just the best place to invest right now. Mattias Ljungman coming up shortly. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now to get straight to your Bloomberg Business Flash, here's Laura Wright. Hi, Laura.
Hi, Francine. The easing of COVID restrictions in the UK is turbocharging the market for London finance jobs. In September alone, more than 2,800 new jobs were posted, marking the busiest month since at least January 2014. According to recruiters Morgan McKinley and data provider VacancySoft, third quarter postings were more than double last year's level. The UK has ended a probe into British Airways and Ryanair over their refusal to reimburse customers when pandemic rules made flying illegal. While the Competition and Markets Authority says it strongly believes people should get refunds, it won't take any action as it says the law isn't clear enough. BA only offered customers vouchers or rebooking, while discounter Ryanair offered rebooking only. The first vaccine for malaria is set to be deployed more widely after more than 3 decades of work. Developed by GlaxoSmithKline and its partners, the shot has been recommended for use by the WHO in children within sub-Saharan Africa and other regions to moderate high transmission. The vaccine prevented only about 4 in 10 cases in a large study, but deployed widely, it could still reduce the 400,000 annual deaths from the disease. The CARLYLE Group believes firms are underinvesting in China. Speaking at the Bloomberg Invest Summit, CEO Q-Sung Lee said many corporate and investment leaders are underexposed to the Chinese market. Lee added that the region's always had what he called short-term bumps, and investors should take a long-term view.
In that region or not, it's really what's the best way and how should we be doing it? And in my mind, I think there's more opportunity in that region of the world than not, especially since valuations have corrected a bit in that part of the world.
That's the Bloomberg Business Flash. Francine.
Laura, thanks so much. Now, Mattias Ljungman has spent 20 years investing in European startups, including Klarna, Supercell, and Viagogo. Earlier this year, Mattias launched Moonfire Ventures, a $60 million fund hoping to capitalize on what he calls Europe's tech renaissance. Well, I'm delighted to be joined in the studio in person by Mattias Ljungman. Mattias, great to speak to you. Thanks so much for coming on. So you've had Moonfire actually since 2019. And I imagine then the pandemic has changed the way you look at tech, how you invest, and our use of technology. Are there more opportunities now than before?
Oh, it's been an incredible period. I mean, obviously the pandemic changed everything, right? So today, capital's moving a lot faster. There's lots more opportunities. It sort of moved things forward probably a year, 2 years, maybe 3 years, you know, so everything has gone a lot faster. So just to give you a bit of context, you know, today, you know, we have over $200 billion companies in Europe. The first half of this year, 60 billion was invested into Europe, right? That compares to 40 billion for the whole of last year. Okay. And the whole of last year, we had 50 new unicorns created, and today we have 37 created just in the first half.
But is that because capital's cheap, because of interest rates and people want to invest, or is it because the technology is actually really good coming out of Europe?
So there is a component of like the capital markets, the public markets are recognizing, you know, let's say there's 43 trillion in the US, I don't know, there's some 20 trillion in Europe, recognizing that the future growth is in these private companies. And globally, there's about 3 trillion worth of private companies. And so, yes, they're going after it. But at the same time, too, we're living in a world and an age which we're probably the most innovative we've ever seen. So, you know, what we're building here is across all sectors. It's in finance, it's in healthcare, it's in future of work, it's in gaming, you know, across the whole spectrum.
But does it accelerate the trends that you were seeing, or does it change them?
It is accelerating things. So what we're seeing this continuous change, and we are going to have moments, I think, where things are going to retract, and maybe components of tech are going to, you know, change, given the sort of interest rate environment, inflations, and so on, that can affect some of these tech companies. But the overall sectoral trend is going to still continue, and we're going to see a transformation of what was the old economy into the new economy. And the new economy is transforming again, if you see what I mean, where we're seeing Web 3.0 with the crypto world, which is also changing our whole world.
So what are you looking at? I mean, I love speaking to you because you're in there, you look at some of the companies, you know, some of the gaming companies, some of the crypto companies. Like, what are you looking at the moment that you think is you know, the trend of tomorrow? Yeah, so there's quite a few. So essentially what we aim to focus on is looking at ways in terms of us creating more access and generating more efficiency as well, but also better quality of products. So those are our three things, what we call the sort of golden triangle. And that's across sectors? Across sectors. So there's 4 sectors that we really find fascinating today. One is the future of work. You know, there's a lot going on there. E-health is also extremely interesting. And then also in the world of gaming and leisure and so on. And then you know, the final area is financial services, where we see that there's a lot going on there. And they're each one of them is being disrupted by numerous trends. You know, and crypto comes into both finance and gaming more, whereas like future of work is really interesting because the workplace has changed dramatically, and this pandemic has been really unique. HR used to be a function where people looked at your wages and you know the number of holidays you have. Now it's moved to sort of, how do we handle people? How do we handle talent? Because the war on talent is becoming so important, and people are recognizing that people are their most important asset.
And so that whole area has just expanded dramatically. And with the pandemic, it's not necessarily about your office anymore. It's about how you're providing these services across your whole organization. So you're not defined by a singular place.
But so, Mattias, this would be what, a company, for example, like an outsourced HR company?
Yeah,
that would be a people's person?
So there's all kinds of, so we have some, one of the interesting companies that we invested in is Oliva, which is helping people with mental health. In the office, or so what it's happening is allowing you to have at the right moment, the right clinician at the right time, right? So you're matching them up, and so you're utilizing the software to make this more efficient and seamless. And at the same time, too, we're looking at other software where, for example, we're allowing a sort of plug and play in terms of the managing and onboarding of people, and where we're integrating with lots of different other services. And so this is a company called Humans, growing at light speed. We're really impressed with what they're doing with customers. This is a startup with customers in the US, in Asia, and in Europe.
Mattias, talk to me about gaming, because I mean, it's something that we cover, but I'm not 100% familiar. I'm not a gamer, but it feels like this is the next frontier. And I don't know whether there's also parallel with Squid Games, or whether there's something, that kind of content creation that you could also then monetize in gaming that we should be looking at.
Oh yeah, totally. I mean, it's really exciting. So gaming, is really what is going to become the major media form. How we're thinking about media, it's going to be all about gaming and essentially moving us towards what we call the metaverse, where we're actually spending more time in the digital world than in the physical world. And what's interesting with gaming is the essence of most games is some sort of economy. If you play a game, there's always some coins flipping around, and then you add crypto into that, you're actually putting in two different interesting forces in terms of allowing you to play a game, buy things, and then play another game at another area and bring those things with you. So it's building your identity, and particularly with NFTs and things like that, those are like real valuable things that there's actually a small portion of them. There's not like endless supply of it. And so, people who want to identify themselves with a certain, in the past with a watch or a brand name, you're doing the same thing online.
Okay, fabulous. Mattias, we'll have to get you back on to talk a lot more about crypto and NFTs. Mattias Ljungman, Chief Executive and Founder of Moonfire Ventures, joining us this morning. Now, coming up, JP Morgan gives a big boost to SOFR, what could be a watershed moment in the life after LIBOR. So we look at banking next. This is Bloomberg.
I'm not surprised to see this most recent retreat and correction that we've been going through.
Certainly China has already gone through a bit of a correction.
Their plan is to be a superpower, and they're moving consistently in that direction. So we do think it's investable.
Diversification is key in an environment like this.
Being at least somewhat better diversified geographically.
You have to pivot, you have to change, you have to be agile.
Active management, I think, is going to be more important in the next decade in the past.
We've seen a dramatic growth in allocations to privates.
Anybody who's on the sidelines underallocated to alts pre-pandemic and saw the performance. With this reopening, we're just seeing a real resurgence in demand.
It has never been more punitive to hold cash.
If the inflation piece falls over, the whole thing falls over.
The problem is stagflation. That's the real risk.
There's no answers to it yet, but we should expect to see continued volatility.
Well, some top investors are speaking to us on day 2 of the Bloomberg Invest Global Conference, pointing to the importance of diversification amid inflation risks and volatility. Now, this week, we have had what it seemed a watershed moment in the attempt to ditch LIBOR. JP Morgan, with its seal of approval, gives a big boost to the dollar heir, SOFR. Bloomberg's FX and rates editor, Will Shaw, joins us now. So, Will, good morning. Why is JP Morgan's seal of approval so important?
Good morning, Fran. So the backdrop to this is that banks have only got 3 months until all the loans that they issue have to be pegged to a LIBOR replacement. Now, there'd been very little progress in the loan market, and as far as we're aware, none in the $1.2 trillion leveraged loan market. Now, that regulators will be pleased to see has changed. We've seen a loan which is now being marketed by JP Morgan. It's worth $600 million, though the people responsible for the LIBOR transition will be hoping that this is enough to finally get everything moving.
So will JP Morgan's involvement actually break the logjam?
So obviously, like, JP Morgan is a huge global bank. Other lenders have now effectively got a role model. They can see that, yes, this can be done. Any technical obstacles can be overcome. The LSTA, which is an industry body group, is talking about this as a tip of the iceberg moment. What I would say, though, is aside from JP Morgan, there's no indication that this year-end deadline is going to get pushed back. So banks were going to have to get on with this anyway.
Well, the FCA has been given a lifeline to British and Japanese banks. What have they announced?
So there was concern amongst banks in London and Tokyo that they had these piles of contracts that could never realistically move away from LIBOR at the end of this year. That was causing worries that there'd be a cliff edge scenario, potential upheaval in the financial markets. Now, the FCA has provided like a critical pressure valve for that, or it's suggested that it's thinking about doing it at least. So it's floated the idea of asking LIBOR's administrator to keep publishing an artificial LIBOR number right through next year. So that's being expanded to quite a large group of products that will provide a lot of help for the market.
Well, how will this benefit the market?
So the worry was that nobody knew, once LIBOR came to an end, what benchmark these contracts would be using. And the fear was that that would trigger these time-consuming and expensive legal rows amongst companies about which benchmark to deploy. That, it looks like, has been avoided. PwC are talking about this as something that will be a huge relief to market participants everywhere.
All right, well, thank you so much. Of course, our Will Shaw there with the very latest on the life after LIBOR. Now, the Bloomberg Short-Term Bank Yield Index, BSBY, an alternative SOFR for dollar LIBOR, adjusted disclaimers also administered by a subsidiary of Bloomberg LP, the parent company of Bloomberg News. A couple of things we want to alert you about. First of all, in the markets, UN's World Food Price Index climbing to a highest in a decade. And then we, of course, look at everything that's been going on in the markets. We're having a good and robust conversation with Mattias Ljungman of Moonfire, talking about some of the technology stocks that we're looking at. Overall, stocks rising. U.S. equity futures also rising, bolstered by progress on the debt ceiling impasse in Washington, also ahead of a key jobs report. Now, European equities rebounding, as we heard from the European Central Bank, also saying to be studying a new bond buying program to prevent market turmoil when emergency purchases get phased out. A couple of other things I'm watching, helping sentiment, Russia's offer to ease Europe's energy crunch, the U.S. President Joe Biden's plans to meet virtually with his Chinese counterpart as well. Now, markets, of course, buffeted in the past couple of months by worries about the energy crisis, worries about elevated inflation, reduced stimulus and slower growth. Concern over U.S. political bickering seems to be easing, and Friday's payroll reports expected to shed light on the trajectory of the Federal Reserve's bond purchases. Bloomberg Surveillance Early Edition continues in the next hour. Danny Berger joins me here from London. Kailey Leinz will be in New York. This is Bloomberg.
We should get rid of the debt ceiling. We don't need to have this kind of brinkmanship every couple of years.
We're making good progress. We're not there yet, but I hope we can come to an agreement.
If done, we're going to be defaulting on a debt that would lead to self-inflicted wounds that risk the market tanking.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, October 7th. Our top stories today. Back from the brink, the Senate's close to a deal on the debt limit that would allow the U.S. to avert a default, at least for a couple of months. A major miss for Evergrande. Creditors have yet to be paid for a dollar bond they say is guaranteed by the struggling Chinese property giant. And Russia to the rescue while Moscow offers to ease Europe's natural gas crisis. The deal has a few strings attached, though. Well, good morning, everyone. I'm Francine Lacqua with Danny Berger in London, Kailey Leinz in New York, Matt Miller off this week. Kailey, if you look at the markets, today they're feeling pretty comfortable because of U.S. politics. We could have a resolution for a couple of months, and then the U.S. energy crisis may also be abating.
Yeah, it's definitely a risk-on feel today, Francine. And you saw that in the Asian session. Actually, the MSCI Asia Pacific Index rose for the first day in 5 sessions. Really, if you look at global macro movers or the GMM function on the Bloomberg terminal, you see green all across the screen, including for the major equity benchmarks, which were really higher across the board. The Philippines were one exception, but stocks up in Japan, South Korea, and Taiwan. And the big outperformance came from Hong Kong, with the Hang Seng up about 3 percentage points. And that was really led by technology, a big rebound taking place for the Hang Seng Tech Index, which hit a record low yesterday. Today, though, jumping off of that all-time low, up more than 5% in the overnight session. One individual stock to pay attention to is China Estate Holdings. It has been a backer of China Evergrande, and the billionaire Lau family that owns it, majority of it, offered to take the rest of the company private at 4 Hong Kong dollars per share this morning, up 32% in the overnight session in Asia, trading at 382. And I would just note as well, in foreign exchange, pretty much all Asian currencies are stronger against the dollar today, but it is being led by the likes of the Philippine peso and the Thai baht, which really underscores the risk on tone. Right now, the Philippine peso stronger against the dollar by 0.6%. Now, here in the U.S., we kind of saw the rebound of all rebounds yesterday. At one point in the session, the S&P 500 was down 1.3%, but after we got that news on a debt ceiling compromise, it actually ended the day higher by 0.4%. That is the first time we have seen a full recovery from losses of that magnitude going all the way back to February. And it does look like the gains will continue this morning. S&P 500 futures up about 0.6%. Now, we saw a round trip in the bond market as well. Yesterday, yields as high as 1.57%. They closed at 152, and that's basically where we trade this morning on the 10-year Treasury. The dollar is giving back some of its strength over the last 2 days. And oil, I would point out, down 2% again today. It is heading for its worst 2 days since all the way back in August, Danny. WTI right now trading at $75.84 a barrel.
That energy story, some of the easing of those prices certainly giving us a lift higher in these European markets where the ping pong continues. Yesterday it was lower by more than 1%. Today it's higher by more than 1%. But it really is those kinds of companies that benefit from easier energy prices that are outperforming us today. So think about utilities, construction, autos. That stands to reason that we have the DAX up more than 1%. Spain, the IBEX up more than 1.5%. We're also looking at the Cacaron up more than 1% as well. So some of those large companies where we had been worried about the energy story really allowing us to thrust higher from here. Now, if we flip up the boards and look at specifically the price of energy in Europe, that has cratered as well, down 8% for one of the biggest declines on record. We're looking at natural gas below 100 euros per megawatt hour. Again, this is roughly the amount it requires to power a house for 1.2 months. So that's trading at 98 euros, allowing the stock market to go higher from here. Really stepping in, aiding markets is Russia offering to help ease some of the crisis. That happened late yesterday, so it's today that we're seeing the benefit of it. That also means yields can ease off somewhat. We're looking at basically a flat UK 10-year yield, but really where we're seeing a lot of the buying is in Italy. Look at BTP yields here. They are lower by 2 basis points. People happy to jump into more risky Italian debt after a Bloomberg scoop last night that the ECB is looking at a new bond buying program after the emergency runs out. That means investors, Francine, are happy to rush in and buy the sovereign debt that frequently is seen as more risky.
Yeah, there you go, and Draghi to the rescue. A lot going on in the markets today, that in between also U.S. gas and power prices, as Dan was just saying, stabilizing. Now, this is what else we have today. We'll get U.S. initial jobless claims, 8:30 a.m. New York time. Then Cleveland Fed President Loretta Mester takes part in a virtual panel discussion on inflation dynamics with ECB Executive Board member Philip Lane. That's at 11:45 a.m. New York time, 5:30 p.m. New York time. Tesla's annual shareholder meeting will also be held from the company's under construction factory near Austin, Texas. crisis. And then the EU Sustainable Investment Summit 2021 takes place. It's the first annual event of the European Commission on Sustainable Investment following the launch of the European Green Deal. Now, we start in Washington. Democrats signaling they'll accept Senate Republican leader Mitch McConnell's offer to raise the debt ceiling into December. Now, that averts the immediate risk of a default, but raises the risk of another political fight near the end of the year. Let's get straight to Jack Fitzpatrick, Bloomberg government reporter, who joins us from Washington. Jack, first of all, do the Democrats actually have this as a win, and could the vote be today?
They don't have a handshake deal yet on exactly how this is going to work out. It's very good news for the markets and for both parties that there is this Republican offer to bump things back by 2 months. But first, we have to see them work out the details of how it's going to work and then get to a vote. A vote today is possible. It could potentially get bumped to Friday, so we're still waiting on the exact timing of that. But really keep in mind, this keeps everything essentially the same in terms of the stalemate that the two parties had come to, and just punts it until December. We heard positive feedback from Senate Democrats that were happy that Mitch McConnell offered to raise it a few $100 billion to get them to December. But still, Democrats are saying they aren't going to follow his demands and eventually significantly raise it through the reconciliation process, which would allow them to do it alone without Republican votes. So the underlying issue is absolutely still there and is a bit dangerous for December, but at least there's not the time crunch that they faced as of yesterday morning.
Yeah, at least in theory, the Treasury can pay its bills at least through December 3rd. And speaking of the Treasury Department, Jack, we also got news overnight that officials there are trying to decide whether the U.S. should push IMF Managing Director Kristalina Georgieva to resign amid an ethics scandal. Can you walk us through the administration's thinking?
I'll be honest, we don't have that many details on exactly what the administration's approach is there. Yesterday was a little bit of a wild day on Capitol Hill, so I'm going to be a bit short on details on exactly the administration's stance on the IMF chief, but we'll follow up on that one.
Okay, Jack, thank you very much. We'll have to get you back to cover that for us. Of course, debating now the Biden team of the IMF chief's fate. That's our Jack Fitzpatrick of Bloomberg government. Now, turning to China, where creditors have yet to receive repayment of a dollar bond they say is guaranteed by Evergrande and one of its units. Let's get more on this with Bloomberg's Tom McKenzie. So, Tom, this one, its effective due date was essentially Monday. What are the consequences of non-payment on this specific bond?
Well, this bond is linked to a company which is part of a JV, which is owned by Evergrande. The murkiness, again, pointing to investor concerns about the lack of transparency in terms of how the property sector and Evergrande and others have been borrowing. This is Jumbo Fortune Enterprises. Don't get distracted by the ridiculous name and the irony there, but this is a company that lent essentially $206 million. This is the bond, this is the principal, and as you say, it wasn't paid back. So at least that's what we're hearing from the owners of this bond. It follows, of course, on from the fact that we know that other bondholders, dollar bondholders, have not been paid the principal in the last few weeks. They have a grace period. This one does not. So the importance and the significance of this is that this could be the first major default. We're still finding and waiting to get the details on that. The others had this window grace period. This one doesn't. We'll wait a few days because there's 5 days where they can work through some technicalities. This could be the first major default then for a business linked to and owned by Evergrande.
Tom, we also found out through sources that President Joe Biden plans to meet virtually with the Chinese president, Xi, before the end of the year. The U.S. Secretary of State, Antony Blinken, told us in an interview yesterday that the U.S. wants China to act responsibly.
What China does economically is going to have profound ramifications, profound effects on literally the entire world because all of our economies are so intertwined. So certainly when it comes to something that could have a major impact on the Chinese economy, we look to China to act responsibly and to deal effectively with any challenges.
I mean, there seems to be a belief in the market today that actually things are stabilizing to superpowers.
Certainly. I mean, investors and the markets, whenever they see that there is communication between the two sides and at the most senior level, that is seen as a positive. We know that they spent 6 hours, Yang Jiechi, the Chinese side, a key advisor on foreign policy, and Jake Sullivan from the national security team talking in the last few days. This seems to have led up to this meeting that's going to happen by the end of the year. That is the plan between the two presidents. But the issues and the tensions, of course, remain across a whole number of issues. Taiwan, and you talked to the Secretary of State about this, and the fact that China's been sending dozens of planes into Taiwanese airspace, and trade as well. We know that Catherine Tai is going to be talking to Vice Premier Liu He, who leads the trade negotiations on the Chinese side, possibly as early as this week. She wants to ensure that China is going to meet these commitments around the Phase 1 deal.
Tom, thank you so much. Our Tom McKenzie there with the very latest on China, Evergrande, and of course, foreign policy. Now, Russian President Vladimir Putin has offered to ease Europe's gas crisis on a day that saw gas prices jump 40%. Russia could potentially export record volumes of the vital fuel to the continent this year. Well, again, the U.S. Secretary of State spoke to us about high energy prices yesterday.
I think the high energy prices we're seeing now reinforce a few things. They reinforce the need for a transition to new forms of energy, particularly sustainable energy, and at the same time, they reinforce the need for energy diversification.
So let's get more on this with Bloomberg's Ritika Gupta. I mean, Ritika, the market remains volatile, and it's unclear whether President Putin is happy to help with supplies at what cost. Is it all about Nord Stream 2?
Yeah, Francine, it has certainly been a volatile couple of days here for that gas market. And we saw going into yesterday, we saw those Dutch front-end futures surging some 60%, only to drop in the double digits after those comments from President Putin that Russia would step in and stabilize the market by supplying record supplies there of record volumes to Europe. And this morning, we see that slump continue here in the UK, over in Europe, and also those US gas futures as well. But of course, there are strings attached, as you mentioned. Russia seeking that regulatory approval for Nord Stream 2. That is its latest gas export project. It gets about 23% of its exports from Western Europe. So that is its top market here, Francine. But of course, Germany has until January to make that decision. But the situation over here in Europe is dire. Inventories in Europe are sitting low, and Russia, there's also the question of whether Russia can actually fulfill on these promises, because it also has its own domestic market and has to meet the demand there, which has been steadily increasing as well. So the main message really here from President Putin that if Europe helps Russia, then Russia is prepared to help Europe.
There's always a catch. Thank you so much to Bloomberg's Ritika Gupta. And let's get back to the U.S. markets now and take a look at some stocks moving in pre-market trading. One of your big outperformers to the upside is Rocket Lab, of course, the space systems company. It is rocketing higher, one might say, up 8.5% in pre-market trading after the company said it won a contract with NASA for a technology launch later on next year. Another stock moving to the upside is Levi Strauss. It reported after the bell, revenue topped expectations. It raised its full-year profit outlook. Apparently, a lot of people are out there buying denim, and that is actually enabling the company to pass on higher input costs and increased prices for consumers. So it's not feeling a whole lot of hurt from supply chain issues. It's up 4% in pre-market trading. One mover to the downside, though, is Moderna, of course, the COVID-19 vaccine maker. You have a number of countries now halting shots in younger people. Sweden halting yesterday for those under 30, Denmark for those under 18, and then this morning, Finland saying they're not giving shots to any men under the age of 30. So the stock fell 9% yesterday, and it's lower by another 1.8% or so this morning, Francine.
Kailey, a lot going on, of course, with some of these vaccine producers. Now, coming up, Lori Heinel, State Street Global Advisors Global Chief Investment Officer. She'll have a thing or two to say about inflation and market movements. This is Bloomberg.
All these attempts to revise frameworks for monetary policy, average inflation targeting, just out of the window, basically, because the idea that you can gradually control inflation to let it go above target a little bit for a short period and then bring it back doesn't square with what happens in the real world. So I think being alert to the data, some of the upward pressures will be transitory, but the real risk is that it gets embedded into upward pressure on wages. That's going to be the thing that central banks will focus on.
Well, the former Bank of England Governor Mervyn King is speaking to me a little bit earlier. Now let's get the lowdown on the markets with Eddie van der Walt, our Bloomberg MLive strategist. Eddie, I have to say, Lord King was actually very punchy. He says, look, we're getting inflation completely wrong. It's sticky and we're reading it wrong because of the data available at the moment. So ditch the forecasts.
Yeah, and I think he's nailing all of the right points. I mean, nobody is surprised by that because he's extremely experienced and knows the market very well. But I think this is the risk, right, that we are seeing these pressures feeding through into wages, and we are already seeing some of that. Now, tomorrow when we get the non-farm payrolls from the US, we will learn a little bit more about whether that is continuing again this month. But it does feel like we're getting to that point where inflation is crossing the bridge from transitory to persistent.
And that raises the question of Fed action, Eddie. I'm glad you brought up non-farm payrolls. Will the jobs report tomorrow change anything about the equation for the Fed?
You know, the non-farm payrolls number is always one of the most watched numbers in markets. But this one in particular, I wonder, because it would have to be an absolute shocker for the Fed to say, listen, we're gonna ditch our plans and we're not gonna do anything. I think almost more important is the CPI reading that we're getting next week. So I think, you know, and really we have seen, we looked at this on Markets Live, volatility has been greater during US CPI readings than they have been during non-farm payrolls readings.
Well, at least one source of relief before we get jobs numbers that might be that has been lowering energy prices, just that speculation because Russia stepping in, saying that they're willing to help. But is that overdone? Is the crisis over?
I was surprised by the size of the reaction because Putin's promises came with a lot of strings attached, right? He would like to see Nord Stream 2 approved and he'd like to see it soon. And what he said was, I've already sent you loads of gas this year. We're on track for a record. So it's kind of like me telling my kids, listen, you've had loads of ice cream. Why should you have any more? I was a little bit surprised.
I say that all the time.
Right, exactly. and then their takeaway is like, we're going to have more ice cream. But listen, I think that the natural gas markets have been extremely overcooked. I think there has been some macro tourists that are coming in, and perhaps that was just an excuse for the market to come off a little bit.
Yeah, I have to say I had quite a lot of trolls actually yesterday because apparently I asked the Secretary of State a loaded question by saying, you know, whether there was whether what Putin was saying was politically motivated.
Right.
What does it mean for prices going forward?
For natural gas prices, I think natural gas prices are probably going to remain elevated even if we see a substantial pullback here. And that will, of course, feed through into, into inflation in the UK, into inflation other places. And we might even see companies, we've already seen companies scale back production. And that weighs on GDP, right? Which means that the central bankers don't necessarily want to cut rates because growth isn't as fast as they'd like it to be. So it's a really sticky conundrum for them.
Eddie, thank you so much. Eddie van der Walt there from our Markets Live team. And just a reminder, we have a great blog going that, of course, Eddie and his team are manning MLIV Go on the Bloomberg terminal. We also have some breaking news in banks. BNP Paribas now weighing plans to boost payouts to 60% of profit. Now, that is quite significant. It's only a couple of weeks ago that the ECB actually gave European banks the green light to resume payouts and dividends. So we'll have to see whether other banks follow suit. For the moment, BNP Paribas gaining a touch, 1.4%. A full roundup of the banking sector in Europe shortly. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Danny Berger in London, Kailey Leinz in New York. Now let's get straight to the Bloomberg. First word news, and a federal judge has temporarily blocked Texas' new ban on most abortions. Well, he said the law outsourcing enforcement to bounty hunting members of the public was contrived to get around a constitutional right. It's a major win for the Biden administration, which has sued to overturn the ban. There's a booming market for finance jobs in London now that the UK lockdown has been eased. Now, there were more than 8,300 new listings for financial services positions between July and September. That's more than twice the number of the third quarter last year. In China, travel during the so-called Golden Week national vacation was down by a third from pre-pandemic levels. Government measures to contain coronavirus outbreaks prompted vacationers to spend time closer to home. Well, that may be why Chinese movie theaters saw an increase in business. And South Korea has long been known for its manufacturing. Now, the Netflix hit Squid Games is taking the country's cultural clout to another level. Now, the show is about indebted people fighting in a deadly game for survival. It could help South Korea's cultural exports become much bigger contributors to the economy. And it's absolutely incredible, actually, how Squid Game is lifting soft power and is lifting the economy as a whole. So off air, Kailey and Danny and I talk about it. Danny, I think, is the only one who's seen the first episode, and it's pretty gory.
Yeah, it is a little bit gory, but it is really, really good. I like it a lot, but I love how it's this big cultural phenomenon, and all of us are too concentrated on markets. I'm the only one who's seen anything in only the first episode, Kailey. I think we need to get our binging standards up a little bit.
I mean, I binge my fair share of Netflix, I have to say. I just don't particularly like gore, so I'm not sure if this show is for me, but it is interesting when we're talking about South Korean cultural phenomena. It's not just Squid Game, but there's also K-pop. And I haven't watched Squid Game, but I have heard a fair amount of K-pop, Francine, and that in particular is, I think, a phenomenon that has taken the entire world by storm, and that is definitely not gory.
Yeah, it's not gory. I feel like it was very 2019 K-pop. Netflix now saying that business last year added some $2 billion to Korea's economy. And so this could also be a huge, huge market implication for Netflix and actually the kind of content that will be created going forward.
No, it's actually
definitely.
really
I just want to remind. Yeah, I also just want to remind Baby Shark also came out of South Korea, another very important cultural touchstone for us as well.
Do not get that stuck in our head.
All right, too late. Coming up next, Lori Heinel, State Street Global Advisors Global Chief Investment Officer. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Danny Berger in London, Kailey Leinz in New York. Matt Miller off this week. If you look at the markets, Danny, finally a little bit of uplift because the political worries in the U.S. may be pushed to one side, or at least pushed by a couple of months, and then energy prices stabilizing.
I think the political picture is so fascinating because all of us have talked to people who have said the markets, they're not pricing in any risk from a default. They don't care about it. But looking at what they're doing today, and indeed yesterday, right when we got that news, I mean, Fran, it seems like they were pricing it in. At least it added to the more positive mood music that we had at the end of the day yesterday.
100%, which is why, Kailey, we're seeing this risk-on mood.
Yeah, I mean, we saw a big reversal intraday in yesterday's session here in the U.S. The S&P 500 going from a 1.3% loss at one point to actually end the day 0.4% higher on news of that debt ceiling compromise potential. And once again, you are seeing green on the screen when it comes to European and U.S. Markets, at least U.S. futures. Right now, the stock 600 in Europe is up the better part of 1%, led by autos and parts. Pretty much every sector is in the green. The one exception is energy, which goes to the stabilization and energy prices you both were just speaking about. And when it comes to S&P 500 futures, we're up about 0.6%. In the bond market, very, very steady. We go basically nowhere, up less than a basis point on the U.S. 10-year yield. We're just north of 152. And then I would point to natural gas futures as well. Talk about a turnaround, down about 9% in yesterday's session, 10% even for U.S. natural gas futures. And once again, we're down 4% in today's session. You're also seeing declines for oil, actually the worst two-day losing streak for oil going back to August. And as a result, energy-related equities are some of your big laggards in pre-market trading. Occidental Petroleum, Devon Energy, Diamondback, and Terra Resources all down in the ballpark of 2 to 3%, Danny.
Kailey, I want to talk about a topic that I feel a lot of companies are saying in their earnings, and you have certainly asked a lot of guests about, and that is margin pressure. How you want to be pricing companies that have this as inflation rises. I want to welcome our radio listeners as well. I have a chart in front of me, which I will explain to you. It is a lovely histogram, and it shows monthly percentage changes, specifically a spread between stocks that have the most pricing power in the U.S. and those that have the least pricing power in the U.S. This is a basket from Goldman Sachs, and it measures this by stability of margin. So again, for our radio listening audience, when this is moving higher, it means that companies with high stable gross margins, aka better pricing power, are outperforming. But over the past month in September, it was actually companies that have lower pricing power that have outperformed. So this is a drop of more than 5%. So in other words, those companies outperformed by 5 percentage points for companies that have good pricing power. Again, this is something we talk about all the time, but it seems the market is not taking these margins into account. Indeed, that trend has continued so far this month, Francine.
Danny, a lot going on, of course, in these markets. Great chart in terms of pricing power. Let's get straight to Lori Heinel, State Street Global Advisors Global Chief Investment Officer, who joins us today. Lori, always great to speak to you, especially on a day where we've had a lot of market movements, to put it diplomatically, over the last 5 sessions. The market is worried about inflation. The market is worried that actually central banks are just not acting quickly enough. Is there a danger of a correction?
Well, we've been waiting for a bit of a pullback for a while now. Certainly, markets have rallied quite strongly off the bottom. We've seen improving economic backdrop, but of course, there are plenty of things to be concerned about, not least of which is inflation. So to see the markets get a little bit more spooked by that prospect is not surprising. We would see this as actually being a good pause that refreshes, though, because it does set us up, we think, for 2022 to be a pretty good year as we continue to see this recovery elongate.
Lori, you're broadly overweight equities. Are there any sectors where you actually recommend that investors pull back on?
So we actually did trim our positions pretty much across the board last month. And part of that was that we felt that the markets had gotten a little bit ahead of themselves. But we do still remain pretty high conviction on U.S. large cap. We think that that's still a place that does, on a relative basis, pretty well into the balance of the year. But if you look at places like emerging markets, if you look at places like APAC more broadly, that's been an area where we've been a lot more cautious, in part because of China.
Yeah, how great do you think the China risk is, and is it priced in by the market at this point?
Look, there's a lot to be concerned about in China right now, and certainly from the standpoint of some of the headline risks related to real estate, and we've seen some more additional pressures there just this week. That's a place that we're being quite cautious in. We do think, though, that the pullback has made it much more attractive to be in China for long-term investors. We do think, though, in the short term, there's likely to be a lot more volatility, and so we're being a bit more measured in China right at this moment in time. In fact, a lot of what we're talking to clients about is should they actually think about China as a separate allocation versus having it be embedded in their emerging positions.
And obviously, China is where a lot of supply chain issues emanate from, given closures of ports, of factories that we've seen over the course of the pandemic. When you think about those supply chain issues and the higher input costs that result, do you worry about a major headwind to earnings as we head into the tail end of this year?
Well, just as you were talking about a little bit ago, it's easy to get sort of stuck in a few elements, but keep in mind that there are lots of things that are going to drive earnings into the future. Certainly one of those is going to be pricing power, and you had a chart earlier that demonstrated some of that. One of those is going to be the supply chain, but it's also going to be labor costs. And then finally, what do companies invest in? So we think that one of the things that's underappreciated is that business investment has been relatively weak over the last decade, really. Right. And so those companies that find opportunities here to invest might actually be positioned pretty well.
But could that investment take a while longer to come online, Lori, just because of the high energy prices and, again, just general inflation and supply chain issues we've seen?
Yeah, well, it depends. Certainly, if there are large capital goods projects, semiconductors, things of that nature, then clearly that is a much more elongated investment. But if you think about some of the hospitality businesses and their ability to automate certain kinds of labor functions, I mean, you can't go into a grocery store or a restaurant now without encountering some sort of technology to help boost productivity. So there are things that can be much more creative, much more quickly.
I can't help but think about hospitality and think about value stocks that have gotten beaten up. Lori, are you a buyer of value stocks into year end?
So we've actually been a bit more barbelled. So we have liked value because it is an area where the valuations are relatively attractive. And if we do have a much more persistent and sustainable recovery, those stocks should do better. But you can't ignore some of the momentum-driven growth stocks. So we've been a bit playing both ends of the spectrum there.
Lori, when you look at some of the things that actually, remain the most attractive, is there something unusual that you'd be buying in these unusual markets?
Well, there's no free lunch right now. I think that in the bond markets, we've been trying to play the belly of the curve, so more of the 5-year area where we're slightly long duration there. We've looked selectively at credit, again, focused a little bit more on the upper echelons of credit. And then, as I said, in equities, trying to be a bit more diversified. I'd say our positions across the board are more diversified, just given that it's difficult to determine exactly where the next move might come from.
Do you think we have seen the peak in commodity prices for now, and how does that translate to an equity allocation?
Yeah, well, it's a little bit difficult to tell. I mean, certainly things like oil are very idiosyncratic from a supply chain standpoint. We've seen some of the moves in that market just recently. So, and oil prices do drive a lot of what happens in commodities. So I think we've been playing this theme that it's sort of peak everything in terms of peak earnings, perhaps peak pricing, maybe even peak inflation. But a lot of those things still remain to be seen. But I would agree with the idea that we may have seen a peak in some of these cycles.
At the same time, Lori, over at JP Morgan, Marko Kolanovic has said that oil could get up to $130 a barrel, and that wouldn't spook markets. I mean, that would be a very steep price. Is there a limit, you think, to the price of oil that could in itself cause a deeper sell-off in these equity markets?
Well, it kind of links back to what we were talking about earlier in terms of where's the market leadership going to come from. I mean, certainly there are certain sectors of the market that are less vulnerable, right? Again, U.S. large cap growth stocks tend to not be as geared to oil prices, but certainly the value trade can be geared to oil prices. And when you look at other regions around the world, again, in emerging markets, there are winners and losers as it relates to oil. So I don't think it's fair to just cast a broad brush. You have to look under the surface and see who's being impacted by that pricing and who's not.
Lori, were the markets actually worried about the debt ceiling? A lot of people thought they weren't, but if you look at the lift today, because this will be postponed by a couple of months, it suggests that it is.
Well, it's hard to disentangle what specific factor the market's responding to in a particular day. I mean, certainly the debt ceiling is always a bit of a risk, and we've even heard the Fed express caution around their own timing, in part because of the debt ceiling, and now question mark about whether that will put in jeopardy some of their intentions for the end of the year. But we think that there are other much more sort of structural problems beyond the debt ceiling. Certainly the nature of the recovery, continued concerns about inflation, and then some of the supply chain disruptions that we talked about earlier.
Lori, thank you so much for joining us today. Lori Heinel there of State Street. Now, coming up, tensions over Taiwan. The U.S. Secretary of State, Antony Blinken, is urging China to change its behavior. More from our interview shortly. This is Bloomberg. I think that's going to work.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an exclusive conversation with Cisco Systems Chairman and CEO, Chuck Robbins. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua, Danny Berger in London, Kailey Leinz in New York. Now, President Biden planning to hold a virtual meeting with China's Xi Jinping before the end of the year. Among the possible items on the agenda, trade and rising tensions over Taiwan. Well, we sat down with the Secretary of State, Antony Blinken, in Paris, and he discussed a recent phone call between Biden and Xi.
They spoke on the phone just a few weeks ago and had a productive conversation covering a lot of issues. And they, whether they'll have occasion to get together in the weeks or months ahead, we'll see. They're likely to both participate in some fashion in the G20 meeting, for example. But they had a good, productive conversation, and will continue the work that they set out.
We've seen incursions of Chinese plane in Taiwan. Is there a red line that you think President Xi will not cross? Does he understand a red line? Or are tensions high?
Look, the actions we've seen by China are provocative and potentially destabilizing. So, what I hope is that these actions will cease because there is always the possibility of miscalculation, of miscommunication, and that's dangerous. So, in the past, we've managed to handle the issues surrounding Taiwan in a way that's actually sustained stability. Provocative actions go in exactly the wrong direction, and it's very important that no one take any unilateral actions that change the status quo by force. And so we really need to see China cease some of the actions that it's taken, because they are potentially a source of instability, not stability.
And so the U.S. needs to take a hard line, but at the same time trying to find a common agreement when it comes to climate change.
Well, there are many issues in the relationship between the United States and China. It is one of the most consequential relationships in the world. It's one of the most complicated relationships in the world. And it has different aspects to it. There is certainly a competitive aspect that we know very well. There are adversarial aspects. There are also cooperative aspects. And we have to be able to deal and engage in every single one of these aspects of the relationship. At the same time, climate happens to be an existential issue that affects everyone on the planet, whether it's the United States, whether it's China, whether it's any other country. And China, like the United States, has great responsibility when it comes to dealing effectively with climate change. We're about 15% of global emissions. China is 36, 37% of global emissions. And so it's important for both of us to step up and meet our responsibilities. And that means having ambitious targets for how we're going to actually curb climate change. It also means making sure that we're contributing to help others deal with resilience, to deal with adaptation. And it means taking important steps like, for example, moving away from coal.
Secretary, there's a lot of focus, of course, on how the Chinese authorities are dealing with Evergrande. What does it tell you about Chinese stewardship?
Well, look, China has to make sovereign economic decisions for itself. But we also know that what China does economically is going to have profound ramifications, profound effects on literally the entire world, because all of our economies are so intertwined. So certainly when it comes to something that could have a major impact on the Chinese economy, we look to China to act responsibly and to deal effectively with any challenges.
That was Secretary of State Antony Blinken speaking with me in Paris. We talked about Taiwan, China. We talked also, of course, about Russia and the subs deal that never happened with France, trying to reassure allies that actually things are getting a lot better. If you look at the read across, of course, from that interview, Danny, a lot of the focus is on energy prices. The Secretary of State very cautious in not blaming Russia, but certainly giving them a stark warning.
Yeah, absolutely. And it's interesting that these comments obviously come at a time where energy prices are sky high, and Europe, to some degree, might need to rely on Russia. So it's a very fine line to walk. If Russia is what's needed to help calm the energy complex, at least in the short term, it also becomes extremely political, Kailey, and obviously consequential for markets.
Well, we are actually just getting some headlines out of the Kremlin. The spokesman there, Dmitry Peskov, saying that Russia's gas boost to the EU does not depend on Nord Stream 2 approvals. It's, of course, the question of the strings attached. But I also thought, Francine, it was interesting, your conversation with Secretary Blinken there about China and climate, given the power crisis and China telling coal producers, energy producers to secure power at whatever it takes, telling coal producers that they can ignore annual quotas. How does that track with China's efforts towards carbon neutrality by 2060? It's a very fine line to walk.
Right, and a very simple question. If you're fighting with China on technology, if you're fighting with China on Taiwan, and if you're fighting almost on every front, how do you get them to sit down to talk about those climate change talks? Now, coming up, it's the final day of the Bloomberg Invest Global Summit. We'll hear from B Capital Group Vice Chair Sheila Patel and the former U.S. Treasury Secretary Steve Mnuchin. Look for those throughout the day today. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Danny Berger in London, Kailey Leinz in New York. We're also joined by Tom Keene. We're so excited to have Tom Keene, co-anchor of Bloomberg Surveillance, with us. Tom, after markets falling out of bed, it seems like today they take solace in the fact that U.S. politics are stabilizing somewhat, at least for a couple of months.
Well, the gentleman from Moscow and the gentleman from Kentucky come to save the day. Clearly, it's a rescue towards good news, and the tape shows that this morning. We've got to fold in here, not the market activity we've seen, Francine, but going to jobs day tomorrow. Let's look at the Thursday chart. In America, claims come out weekly. That's high-frequency data, and they'll be out at 8:30 this morning. This is a really odd and important chart. This is claims back a gazillion years, adjusted for population. You got a statistic, but you got to adjust it for the size of America. A sloping down line is a better labor economy, a better 1980s, and then a general trend, and then a fully employed America before the pandemic. We spike up in the agony that we all lived in 17 months ago, and we've really come down remarkably towards, once again, a so-called fully employed America.
Well, Tom, there's mysteries to this labor market as well, because you can still get hundreds of thousands in the print on weekly jobless claims and have 10 million job openings in the U.S.
Well, this is one of the oddities we see. I think Jeffrey Sachs was led on this. Jeff Sachs of Columbia was a decade ahead of everybody else on the bipart of America. John Edwards, two Americas. And there's a part of America that is essentially unemployable within a modern, skilled America. And that's what we talk about. Certainly, that's what they talk about in Washington each and every day.
Tom, do we need to see more from companies in terms of their earnings and what they're saying about the labor market to get a better picture of exactly what's going on?
They're gonna, from what I can tell, Danny, every single company is saying we can't find people. I don't know. I don't know any other instance besides that. There's a desperation here, and of course, the truly generational thing here, back at least 15 years, is finally labor has power, and you get an increasing labor share. That's a debate. That's a theory. Maybe it'll happen.
But Tom, we keep on hearing across the world, and especially in the U.S., that people can't find the jobs that they need to employ for. So how do you fix that?
Well, you and I have had these conversations at Davos. You fell off your chair once, asleep over it, where they go, well, we need to educate more for long-term Americans. Okay, that takes only 20 or 30 years. Your good question is, how do we do it in 24 months? And that's a really debated question. I would go to the German model, which I think almost a guild model, Francine, back to the 17th century, 18th century. But maybe the guild model of Germany does a little bit better.
Yeah, here in the UK, it's even more complex because a lot of people can drive, but they cannot find the lorry
Francine,
drivers.
did you see Hermes earnings?
I did not, actually.
I mean, I know you were on top of it. Hermes's sales were up 33% over pre-pandemic.
That's incredible.
That's
I mean,
an incredible statistic.
Yeah, I guess it's pent-up demand, right? So you don't shop for 18 months and then you go in. I think Hermes, like Chanel, also increased prices. I mean, there was a rumor that Chanel increased prices by 30%.
Puts me in my place. I'm going Hermes.
She's flaunting the pronunciation.
Kailey, I'm going Louis Vuitton and the rest of it, and she's got the fancy French accent.
If you have the fancy French accent, perhaps you get a discount, Tom. I know Tom Keene working on the Rosetta Stone for Italian and French, so I'm looking forward to testing Tom, co-anchor of Bloomberg Surveillance. Of course, he'll be on with full market reaction shortly. Let's take a look at what else we're watching, and Kailey's also looking at U.S. data.
Yeah, I feel like Tom and I are always watching the same thing because I, too, am watching initial jobless claims. We get the print at 8:30 a.m. Eastern Time, expecting for 348,000. Of course, this is ahead of the jobs report tomorrow. It really is just whether or not it gives us a signal of continued labor market improvement or not, because remember, we're coming up 3 consecutive weeks where jobless claims have risen, but a lot of that was due to California, to effects from Hurricane Ida. So we'll see how the print shakes out today, Danny.
Kailey, I am looking at Tesla, specifically their annual shareholder meeting later today. It'll be after the bell in the U.S. Now, usually this is just kind of a perfunctory type event. You go through the motions of voting for things, everything passes. But I think it will be fascinating because this time around, it's being hosted from Texas. And if anyone has been paying attention to the news from Tesla, they just had a factory being constructed in Austin. This was a Bloomberg scoop. Will they announce it as their new headquarters in this meeting, Francine?
Yeah, that's pretty interesting, especially as we've seen, for example, Cathie Wood move headquarters elsewhere. I'm looking at Russia offering to ease Europe's gas crisis. So we have great reporting from our team in Moscow saying that Vladimir Putin's comments were actually a deliberate attempt now to calm an increasing unstable market. This is according to people with knowledge of the country's energy policy. Now, more Bloomberg Surveillance up ahead. We'll hear from Richard Haas, Council on Foreign Relations President, and of course, we look at energy with Amrita Sen, Energy Aspects Chief Oil Analyst. This is Bloomberg.